if you heard Bailey's introduction, she said, we're going to review the most recent quarter of their earnings call. Well, if you happen to look them up, they haven't done earnings calls the last 3 quarters. That makes it kind of difficult to look at the most recent quarter of their communication, other than what they submitted to the financial SEC organization. So today it's going to be a little different. If you're used to kind of our standard format, we're going to adapt it a little bit. A number of you have asked us to look at GameStop, so thought it would be fun. And it's going to have a little bit of what we traditionally do here, which is to review the 2 tools on assessing a company's earnings call. One's called the executive alignment tool. It assesses the strategic focus of the company. And the second is the navigating the financial tool, which allows you to get the financial tool. So we'll do that, but it's going to be in a little bit a unique way today, as they don't report. They did not report, have not reported the last 3 quarters. At the end of this, I'll ask you, why do you think why? Based upon all their performance, why are they holding off on reporting? Might be an interesting question. But for those who've been with us before, let's start making sure we're comfortable with the tools as Bailey described. Our number one way in which we're going to communicate is through the chat box. So make sure you open up the chat box. It should be at the bottom of your screen on the right-hand side. Click that open, and in the chat box, just tell me where you're calling in from. Just type in there, make sure it's set to everyone. Where are you calling in from? We're calling just south of Salt Lake City, Utah, where we say we have some of the best snow on earth. In fact, we had the great opportunity to host the Winter Olympics in 2002, and hopefully in 2034, we're trying for it again. Okay, looks like we've got a lot of people from North America. Welcome, welcome. So good morning for most of us, maybe getting to good afternoon, depending on where you're located. Any international? London, welcome. Marjana, good to have you with us as we get going. It's afternoon for you. Well, folks, that looks like that's working. As Bailey said, feel free to ask questions as we go through. We'll try and track that the best we can. And at the end, we'll stick on for a little bit more if you have any questions there. Well, let me start with a quick polling question. And the polling question just gets to whether or not you've had a chance to participate in one of our webinars before. Now, for those that haven't, oh, it looks like my polling's not working. Oh, there it is. There it should be. Well, it looks like my polling's not working. Well, flexibility is a sign of maturity here. Let's go with the chat box. Just put yes or no. Is this your first time attending, or are you brand new for us today doing these webinars? For those that have gone through our Building Business Acumen courses, you'll know that this is a follow-on learning experience. You go to an intensive course learning about financial statements, how to assess a company's strategy, make decisions, etc. Well, how do you continue to apply it? Well, one way that we recommend is to come to the next 2 to 3 of these after you've taken the course. It's a great way to practice using the tools. We do these every month. We do a different company every single month. So it's a great opportunity to kind of practice using the tools. So as we look at, it's for participants, but it's also open for many others. Anybody can come to this. Our goal is to provide these tools for anybody, whether you've gone through our program or not. No worries. It's good to have you with us as we get going today here on our webinar. As we look at this program today, our purpose is to continue to build upon the learning that we've had in prior programs. With that in mind, the question I have for you is, when is the last time you listened to an earnings call? Just put in the chat box. When's the last time you've listened to an earnings call? Let me share my screen. I'm going to go ahead and share my screen, make sure everybody sees that. Let's get the right screen here. Looks like I need to move a document here. Let's get rid of that. Okay, should be able to see my screen. So my question for you today is, when is the last time you had a chance to listen to an earnings call? Is it this year? Well, obviously, it's maybe not 2024. Was it last year? Has it been a while? Put it in the chat box. Let's get a feel for how many of you have had a chance to listen to an earnings call. Now, these calls happen on a quarterly basis for most companies. Go figure. GameStop hasn't done it the last 3 quarters. The last one they did was for the end of year 2022. So Q1, Q2, Q3 of last year, they did not have an earnings call. Interesting, very unique. Not only that, is in halfway through 2023, they actually got a new CEO. So what we're going to try and do is we're going to try and do what we've always done, which is practice listening to these calls, how to assess them from a strategic focus, as well as how to be able to do a financial. But we're going to do it in a kind of unique way. I'm going to look at the most recent call that they did, which was end of year last year. It would have been about a year ago this time, actually. I think it was in February timeframe, if I remember correctly. So about a year ago this time, they had their last call. Since then, they have not communicated. So we're going to go and review what their prior CEO communicated. Then I'm going to share with you what's happened. What happened since June 7 of this year? Pretty significant changes. Then we actually do have their Q3 of 2023 financial information. So you kind of see what their CEO said, their prior CEO. Now I got a new CEO. What is he saying? Okay, well, let's see what the results say. And we'll look at it from that standpoint. So hopefully that'll work with you. Well, let me go ahead and jump in as we look at these earnings calls. I call them a hidden gem. If you're not listening to earnings calls, highly recommend them. Take an hour a quarter, especially if you're publicly traded. I can't think of a better way to be able to understand what your company's doing, how they're making money, what their strategies are, but most importantly, how can you as an individual take that knowledge and be able to execute around the strategy of the company? That's what these earnings calls allow you to do. That being said, what's interesting is only a very small percentage of employees actually listen to their company's calls. In fact, here's some unique stats that you may have heard or may have not heard. 95% of employees don't understand company strategies. This comes from a Harvard research. About 95% of employees don't understand their company strategy. That's kind of difficult. If your employees don't understand strategy, I may be an excellent individual contributor, very good at my job, but if I don't know the direction I'm going, I may end up steering the ship in the wrong direction. Well, here's an interesting stat. 90% of employees don't understand their key financial metrics or measures. Well, folks, every quarter you get a chance to review these if you're publicly traded. If you're somebody who sells into publicly traded or you have partnerships with publicly traded, I absolutely recommend this. Anybody who's been through our course, it's a great foundation builder. But where you really move the lead, kind of change your success or change your results as if you do something with it. And I can't think of a better thing to do than to take the time every quarter to assess what the strategic focus of your business is, as well as the financial performance, and then go back with your functional expertise and help us make good decisions. Well, with those types of stats, a very small percent of employees listen to calls. 95% of employees don't understand company strategy, and 90% don't understand metrics. And by the way, you haven't done a call since last 2022. That's kind of a unique position to be in, Mr. Matt Furlong, at January of 2022, as he's doing his call. They were a big player in retail gaming. If you're international, you're not as familiar with GameStop. Very well known as a gaming, retail stores around gaming. And they've done a number of things to try and go virtual as well, but very well known as a place you go buy games, you could trade them in, you could buy used games, etc. They've really struggled over the past many years. Basically, since COVID, you saw significant change in their financial performance. Not only that, the market, January of last year, the market was, or January of a few years ago, 2021, the whole market was betting against them, and they continue to bet against them, continue to say they're not going to survive. They have this unique situation. Many of us heard of this in the media. Give me a thumbs up or say yes or no. Have you ever heard of what they call a meme stock? This is how social media can impact the stock's success. They kind of describe that, and that's what happened in 2021. We'll get into that a little bit today. Not only that, but 6 months later, you're going to be gone from this company. You don't know when you're doing this call that you're going to be gone. And in fact, he started to really make some changes. You started to see improved performance. By June, he's out. So we'll start with what is it he would want as employees. So imagine a year ago this time, you've come out of COVID. It's the end of 2022. You're starting to see a little bit of improvement. Your stock price skyrocketed in 2021. You're able to take some stock and actually issue stock, get some cash in. Your financial position strengthening a little bit, but still the dynamics of a retail gaming store is not a great economic model. What is it you want your employees to understand January, February of last year? What do you want your customers to understand? Absolutely. Dumb Money. We're going to talk about that in a moment. Dumb Money is a great movie. I'll talk about what happened in 2021. What is it you want your shareholders to understand? And of course, your partners. That's where this tool comes into play. The tool I'm going to give you at the end of our course today is a simple tool. This tool, with any executive communication on a quarterly basis, or even if you get a unique email maybe sent to you, maybe your executive team is doing a town hall meeting. This tool should be used at any time you're communicating or listening to the communication of your executive team. Now, most of the time, that's going to be on a quarterly basis. And it has a basic tool called the executive alignment tool. With this tool, you can assess the strategic focus of a company. The second tool is the financial tool. And with that tool, in about 15 minutes, you can assess the financial performance, what I call the scoreboard. And here's my guarantee. After doing this for 14 years, working with 33 of the Fortune 50, many of the Fortune 500, what we find is employees take the time to step back, get the big picture of the company, be able to see what is the strategic objectives of the company, what is our key financial metrics, and how can I impact the financial success of the organization. You'll absolutely build your credibility, you'll build your career, and you'll build your company. So that's what I want to do. Our goal, our mantra is to help every single employee be very comfortable at assessing their strategic focus, financial performance, and what they can do to impact it. And that's what this tool will allow you to do. So I'm going to give you a 3-step process, a tool, and some follow-up assignments during our program today. So let's start with the prepare phase. What do you have to do in preparation for these calls? Well, these calls happen on a quarterly basis, like I said. They're typically somewhere between about 45 minutes and an hour and a half, but most of the time they're about an hour. Now, 99.9% of the companies take the time to do an earnings call. They'll communicate to the market their financial performance. They'll submit it to any governing agencies here in North America. It's the Security Exchange Commission. They'll send that in. And then they'll take the time, though, to sit down. They'll have analysts on the call, investors, employees. Anybody can access it. And you listen to the call. And the first few minutes, you're going to have prepared remarks where the executive team communicates to the market. Now, on this last call, it was just Mr. Furlong communicating to the market. It's only like 3 pages. The total call was 10 minutes. There was no back and forth between investors at the time. Obviously, you don't have to do these calls. You're not required to do that. In fact, right after that, they have not done the last 3 quarters. Then typically what happens is after the prepared remarks, which is usually about 15 to maybe 30 minutes, you then have a Q&A where the analysts from these large hedge funds, these large financial institutions, they get to ask clarifying questions about your stock and what's going on with your financial performance. That's what typically happens. Didn't happen this year. And so as you look at the preparation, the first thing you want to do is go locate that call. Go find where you can get that. Now, for this situation, the easiest way to do that is just to go to Google. Type in Google, whatever company you're looking at, and you can go in and find that. Now, I did that when I went there. They didn't have an earnings call. They don't have it. They have a press release, and they have their quarterly report that they submitted to the SEC. But there was nothing about an earnings call. Now, most of the time what happens, there's a link there. You can click on the link. If it's before the call, you can actually register for it. They'll give you a link so that on the day of the call, you can jump in and listen to the call. Now, don't worry if you don't get a chance to actually listen to the call itself. This transcript, once a call has happened, within about 24 hours, you actually get word for word what is communicated. Now, sometimes the company itself will provide that, but there's a bunch of third-party tools you can look at. So if you want to find that, just go into Google, type in any company you're looking for, what quarter you're looking at, and either look for their webinar or earnings call or look for a transcript. And that's how you'd access that information. Now, if it's before the car, I've registered for it. My next step is I want to review any of my notes from prior quarters. I want to kind of know where they've been. So when I listen to this, say, well, how well did they do? And then be able to take from that, well, where do they say they're going to go? And here in a quarter, I could assess it again. Of course, in this situation, it wasn't available. So there wasn't anything to do on that side. The last thing we recommend in your prepare phase is to do this with somebody else. I recommend if you're a manager, do it with your team. If you're an individual contributor, get with your colleague, get with other peers. This is a great way for new employees to really build their credibility, really understand what the business is talking about. Guys, often we go across the world working with some of the best companies in the world, and we get contracted to provide business and financial acumen training. One of the most common statements we get is, are you an employee of the company? They think we're employees of the company because we know so much about their company. And they'll say, boy, you seem to know so much about a company. How do you know so much about our company? Now, I wish it's because I have a PhD. I wish it was because of my brilliance, my knowledge and capabilities. You want to know why I know so much about GameStop? So I took a couple hours and I reviewed their information. This information is available to all of us. Anybody can access this. And once you've done it 2 to 3 quarters consecutively, you'll absolutely stand out in your organization as somebody who has credibility around what we're trying to do. You'll build your career and you'll build your company. So folks, that's the first step. You got to prepare for them. Now on this one, you go to prepare, it's not there. What do? It's not there. Well, what I did is I went and looked at their last call. It was at the end of year 2022. That's a good starting point. But then I started searching any other communication, and I got a lot of that data, and we'll show you what I found. So the analysis phase is based upon a simple framework. For those that have been in our course, they'll recognize our course, these 5 fundamental drivers every company talks about: cash, profit, assets, growth, and people. These are fundamental, whether you're a multi-billion-dollar oil and gas company or small mom and pop shop, you're going to have these key financial metrics as key drivers to every business. Now, the foundation of those drivers are going to be the financial statements. So you'll notice the foundation of cash driver is the cash flow statement. Now, we talk about cash, the importance of cash in business. Fill in the blank for me. Cash is blank. What would you say for that? Join the it's fun looking at these comments here. Join the GameStop mania. Excellent. Dumb money. I found an ROI, return on invested capital, mentioned the first time in a C-suite instead of EBITDA. I like that. Excellent. Good stuff. Yeah, they're starting to look at different things. How can I get value out of my investment? So cash is king. It's vitally important. It's the blood. It's the queen of an organ. It absolutely is viable. You got to have it. And that's really what you're looking at with a GameStop. Even with not being profitable, not generating positive cash flow, as long as I don't run out of cash, I can survive. I can continue to stand. You think about how many companies during COVID, when the whole market drops, as long as they don't run out of cash, they can recover in 2021 and 2022 and 2023, start to see some nice numbers. But if you run out of cash in business, you die. So cash becomes vitally important. And that was the big question in 2021. What's going to happen? They didn't have a lot of cash. They were struggling financially. And so a bunch of hedge fund individuals started making bets against them with the idea of I can make money as they start to die off. Well, in the end, that changed the whole way we think about these penny stocks and how to think about what's going on with these types of organization. But cash is vitally important. Profit, the difference between the revenue that comes into business and the expenses that go out. There's 2 ways that you can impact profitability in a business. Give me those 2 ways. Anybody who's been in our class, if I'm going to grow profitability, how do I do it? 2 levers. People activate cash and assets to generate profits and drive growth. Absolutely. Yeah, I can reduce my cost. Absolutely, right here. We've all heard that one, right? Our leadership team, reduce costs, reduce costs, reduce costs. The other is to increase my revenue, increase sales. These are absolutely what I want to try and do. If I can provide a product or service at a higher price than what it costs me to provide it, I'll generate profitability for my company. Once I collect those dollars, that becomes cash for my business. Now, assets is what employees have, what companies have. Anything you own or control which has value. As you think about a GameStop, what do they own or control which has value? What would be some of their assets? Put in the chat box. Yeah, inventory, for sure. All the games, all the equipment. Inventory. Stores, physical locations. Yes, some of them at least, but if they own any of them, for sure. All that's going to be part of their asset base. Now, of course, if I got a bunch of assets sitting on the base in my inventory, all of a sudden we get out of COVID, nobody can shop. Now, interesting enough, if you watch the movie Dumb Money, they talk about one of the ways they were able to be a what do they call it? Important or a needed function was because they sold mouses. By selling mouses, allowed them to stay open when other companies had to close because they were selling something that was needed for people to get work done. So it was a needed resource during the downturn. Well, the foundation of asset driver is going to be balance sheet. Growth is what a company expects, what investors are expecting, and then people are what makes it happen. So this 5 driver simple model is a simple way to think about business, talk about business, and execute around it. So the tool I'm going to give you, the first tool is the executive alignment. With this tool, you can assess any executive communication. The way it works, you take the communication on an earnings call, for example, and every time they say something about cash, you're going to put a little slash mark. Every time they say something about profit, little slash mark, assets, growth, and people. Those have been in my class. You'll remember those. If you're new to it, no worries. Just grab a piece of paper, jot down cash, profit, asset, growth, and people. All you're trying to do is use a simple framework to be able to assess what is being communicated. Once you can capture what's being communicated, you then answer a few simple questions. Now, don't worry. If you're saying, Brent, I'm brand new. I haven't even taken one of your classes. No worries. In the document you're going to get at the end of our program, you're going to see we provide a simple definition of cash. You don't have to memorize it. It's right there. Not only that, the genius of this tool is it actually provides what I call trigger words. Simple terms I look for. If I hear them, I know they're talking about cash. So they're talking about sources of use of cash, such as dividends, distributions, stock buybacks. That's all cash. Versus profitability is going to be sales, revenue, pricing, etc. Okay. Now, when you do this, folks, what you'll recognize is it's not exact science. What I mean by that is if all of us, we've got 100 plus, a few hundred of us on right now, depending on how many all of us together, we're not going to get the same number of slash marks around cash. We're not going to get the same numbers around profitability. That being said, our company does about 11 to 1,200 of these sessions every single year. And invariably, the top 2 to 3 drivers will always go to the top. You and I may not have the exact same slash marks, but we'll have very similar top 2 or 3 drivers as we look through this. Once you get through that quick assessment, then you answer 4 simple questions. Which business driver seems to get the most attention? I love the second part of that. And why? What's going on in their organization, external to their organization? Who are they talking to? Those are great whys. What are the 2 or 3 main points the executive is trying to make? What's the goals and objective going forward? And then what key questions or concern raised by the analyst communities? I apologize if this is your first time. We don't have any analyst questions to look at. They didn't have any. That's okay. We can still use the tool. You take what you have and you can still capture good data. Once you're done with the call, a great thing to do is just look at their stock price. See if anything changes when the call happens. You'll see what happens when they announce Mr. Furlong was leaving in June of this year. Well, folks, that's the first tool. Let me jump in and let's do some work together. So here is Matt Furlong. So this was January, February last year. Now, no, he got fired, let go, June 7th of 2023. So he has no anticipation of this. He's trying to build a business. So let's go through this together. And in the chat box, here's what I want you to do. You got the 5 drivers on the side. Just put, as I read through it, which of the 5 drivers are you seeing being communicated? So he says, I want to begin to thank all of our employees. What driver? Put in my chat box. For their dedication and hard work over the past year. Similarly, I want to thank our customers, partners, and stakeholders for their continued loyalty and enthusiasm. What driver there? This continued passion was a strong tailwind for us in 2022 as we pivoted to focus on near-term profitability while pursuing long-term sustainable growth. What drivers are you seeing there? A lot of people in the first up, but now we got profit and growth in there. The past 2 years have obviously been transformative to GameStop. What's the big thing that happened to GameStop? This was a penny stock. It was a stock that was dying, basically. And all of a sudden, these retail investors, through social media, they were able to get that price over $300 a share, folks. Huge improvement. Well, it totally changed their whole business mindset. They were able to help fund get access to cash because of that. Now, there's all sorts of debates as to what the good or bad of that, but significant changes for them. So by the hit 2022, you're starting to see changes that are actually potentially going to improve the business. It's critical to provide context on, as to why we're a stronger, increasingly efficient business today, and one that is well positioned in otherwise challenging retail sector. Yeah, Oscar's saying, but they're still not getting cash flow. Well, I get that. I agree with you 100%, Oscar. But guess what? As long as I have cash, so I don't run out of cash, I can burn through my cash. How long did Amazon burn through cash? As long as I don't run out, I may be able to recover here. Now we can debate as to what's going to happen here, but I agree with you 100%. They're not generating cash. So they're in a tough position right now. Well, here's the second quote of his things. Just on your own, just read it on your own, put in the chat box. What do you see? What drivers you see in as you look through this? I'll underline some of them that stand out to me. Again, this is a big one. They keep bringing it up. Trying to do this. Okay, profit. Yes, growth. Absolutely. So we're seeing a lot about people, a lot about profit, a lot about growth. Now, guess what? He didn't turn this over to a CFO, which they normally do. He didn't then go to analysts. It was again about a 3-page call was all it was. In fact, his big thing is he says, I'm not even going to give you forecasts. Now, this isn't always a positive thing, but he says, I'm not going to give it a forecast. Why? Because I'm tired of telling you stuff and not getting results. We just need to get results, is what he communicates to the market. Well, I went through and did. We probably could have gone through it. There's only 3 pages. Here's what I saw. So profit followed by people were the top two drivers. Those are the top two things that communicated in his 2022 address. Well, so which driver seemed to get most attention? Let's walk through some of that. What were the 2 or 3 key messages, et cetera? So here's what I found. Which business driver seemed to get the most attention and why? It was profit. Why? Well, they pivoted. They really made this change to say, okay, I'm coming out of tough times. 2021, actually, their stock price skyrocketed. They were able to issue stock. Think about that. You're going to low dollars. I can't remember the low when it first started. I want to say $3, but it may have been even less than that. Eventually gets up to over $300 a share. If I have shares, I can issue those shares, get cash coming in. So they really focus on cost cutting, optimizing inventory, focus on enhancing customer experience. We found efficient ways to improve shipping times, integrate online. So they're trying to go virtual. Remember, they're a retail store. They've been known for retail store. That's where you used to go and you could play them, get access, turn your games in, etc. But COVID changed all of that. In fact, it was changing before that. Honestly, we could buy our games in many places, but really started to accelerate in 2020, and they started to struggle. Pivoting, this pivot obviously includes headcount. So they lessened how many employees to try and turn it around. But what do? You're not profitable. You're not generating cash. You're burning through cash. What are your ideas? Well, try and go online, lessen my costs, shut down some stores, get better, more efficient around my inventory. Anything I can do to try and create profitability. GameStop produced net income of $48 million compared to net loss of $147 million in fourth quarter. So you're starting to see some turnarounds from 21 to 22. So a decent story January of last year. The people I want to begin to thank, obviously, why is he thanking all of his people? These are tough times. If you walked into a GameStop lately, we still have one here just south of Salt Lake City, and it's pretty quiet there. It's tough to have employees. You're already struggling. Everybody's struggling to get employees, but in a company that's struggling, it can be more difficult. So making those connections to both employees and shareholders, sticking with them. And there's a bit of there was a bit of a change that happened with the retail investors kind of going against the big hedge fund groups. It created a bit of a culture, a bit of a group of people coming together, uniting to make change happen. And so you had some real stockholders, shareholders were really supportive of trying to resurrect and trying to change where they're going. So taking the time to thank him is a big expression. Of course, then here's the big statement. There's still significant work ahead of us. We're going to aggressively pursue further cost containment, cutting costs, efficiency, profitability, pragmatic growth is what we're focused on. Now, folks, I got to be honest. I've done stuff in financial groups for many, many years. I've owned my own company. I've been working with organizations for 27 years. This is a tough situation to try and resurrect. Now, back in 2020 into 2021, people were giving up on them. The hedge funds were actually shorting on the stock to be able to make money as they were dying off. So barring what happened with this kind of unique retail social media experience, they may have gone out of business. I don't know if they'll survive, to be honest. We'll see what's going on as of late in just a moment. But last year, you got a CEO trying to make changes, trying to resurrect the company. And I think he was doing a lot of good things. So what are the 2 or 3 main points he was making? GameStop has made significant turnaround. Hey, we're making some turnaround. It's now focused on profitability and long-term growth. That was the big focus. GameStop is committed to providing a unique customer experience. GameStop is not providing earnings guidance for the current quarter. Now, that's key message. I pulled that as one of the key messages. That's risky, right? The stock price got a hit as you start to say, look, I'm not going to share anything for the next quarter. I'm starting to pull back on that until we can turn it around. The market typically doesn't like that very well. Daniel kind of talks about, let's see, teams walk in, check out the gaming collectibles, then order those from Amazon. There you go. GameStop needs to redirect purchase. You know, we laugh, I don't know, laugh, but we comment about that. But isn't that kind of what we did with Toys R Us? How many of you would admit that you actually went to Toys R Us with your grandkids or with your kids, tried them out, then you went online and bought it through Amazon, right? We've seen that happen in retail environments. The retail space is changing. If you're not adapting, you're not going to succeed. And of course, GameStop was trying to adapt. What are their goals? So looking ahead, here was his goals. Aggressively focus on year-on-year profitability improvement while also pursuing pragmatic long-term growth. What does that say to us? Remember the 2 levers? I can increase my price or sell more and reduce cost. Obviously, I want to sell more. But what's the big lever you're going to do if you aggressively focus on year-over-year profitability? I'm going to lower my cost. lower headcount, shut down operations, do everything I can to try and withstand. Now, you and I would do the same thing. We might get frustrated in these large corporations, but think about it. If all of a sudden you're an individual, you want to have income, you all of a sudden lose your job. You're going to start cutting back on what you're doing. Well, if it takes you 6 months a year, you might really make some dramatic changes on where you live and the car you're driving, et cetera, because you're just trying to withstand the downturn, get on the other side and survive. That's what you're seeing happening here. We're taking a number of steps, and here's the step. Cut excess costs, leverage our strength, our financial position, the cash that they're carrying. They're carrying about $1 billion of cash. They're able to get access to cash that helps them survive even longer. Assess partnerships with gaming and retail companies, leveraging our unique refurbished capabilities, build a strong presence in higher margin categories like collectibles and toys. So those are some of the strategies January, February last year, about a year ago. Leo asked, why not give guidance? There's a number of reasons why you may not give guidance. In the end, if the guidance isn't very good, why sit and have that time until you can turn around? His comment was basically, look, I want to give you results. I will come back and communicate when we have results instead of continue to communicate. I don't know if it's the best strategy, but we've had some companies that just choose when things are not going well to not make to not have an earnings call, not give guidance in any ways. I think it's also a difficult space to give guidance. You're coming into 2023. Remember, we're thinking possibility of a recession. Retail stores were still trying to resurrect. They're trying to cut costs. The story's not that good, potentially. Well, but not having a call is still sending a message. Absolutely. It does send a message. And investors, but the question might be, if I've got all these activist investors on my board, I got all these groups with me trying to stay with me, maybe there's a bit of, hey, I got the core with me. I'm not going to uphold to Wall Street until I can get on the other side of it. I don't know. I don't have the exact answers, but it's interesting to see that. Key questions and concerns. There was no questions from analysts. The call was only about 10 minutes long. Very, very unique. I've been doing this for a lot of years. Every quarter, I probably read 100 different quarterly reports. First time I've ever, I know some companies, often you get a new startup, they won't start having calls at the very beginning. They'll wait a little bit before they start. But an established company is not having calls. It's not very common by any means. Well, folks, so that's where we were. So what's happened since? Well, June 7th this year, this was their announcement. Look at this, folks. There's not a lot of detail here. GameStop Corp. today disclosed its board of directors has elected Ryan Cohen, I'll talk about who he is in just a moment, as their executive chair chief immediately. So he moves into the executive chairman of the board, okay? Mr. Cohen's responsibilities include capital allocation, so getting cash for the company, overseeing management. In conjunction, the company former CEO, look at that, they didn't even use his name. That's unique, folks. I don't see that very often. Well, 3 months later, who becomes their CEO? Anybody happen to know who their new CEO is? Right here. Mr. Cohen becomes their new CEO. 3 months later, Mr. Cohen becomes their CEO. Now, if you don't, yeah, there you go, Leo, the Chewy guy. Now, Chewy, if you're not familiar with Chewy, some international players, this, if I understand, I'm not an animal person, but I understand they sell like animal toys, food, online kind of, think of it like an Amazon for animal toys, foods, different things like that. Did very well. He's from Canada. He's a Canadian guy. Done very well. Made a bunch of money through that. He's become an activist investor. By the time you got through 21 and into 22, he owned 13% of the business. Now, once you own greater than 10% of most businesses, you have the right to sit on their board. You can actually push yourself into. So a lot of activist investors, this guy, Ryan Cohen, what's the other one? Carl Icahn is very well known as one. You get enough shares, you can start manipulating, or not manipulating, but controlling what happens in the business. So he owns 13%. They fire him June, and then 3 months later, he becomes the CEO. Now, interesting. So let me show you some of the things that happened. Use kind of some of this 5-driver model. So here's some of the things he said since that time. Now, he hasn't done any earnings calls. This is what he's communicated through his regulated communication. So in Q3, he submitted to the SEC financial performance. And this, it's not necessarily just his statement, it's the company's statement. So what are they doing? We're taking the following steps with significant emphasis on cost containment. Again, cost cutting. We got to improve our margins through operational discipline, decrease emphasis on higher margin collectibles. Now, remember before, they were talking about toys and collectibles. That's a big margin for them. So he's increasing the emphasis on those big margin opportunities as well as pre-owned. If it's a pre-owned, they get really high margins on where somebody trades it in, et cetera. Ensure the company cost structure is sustainable relative to revenue. Can we continue to sustain not being profitable? How long can we do that? Can we get on the positive side of that? Prudently increase the size of addressable market by growing our product catalog across PC gaming, collectibles, consumer electronics, toys, augmented reality, virtual reality. I mean, that's a big new play out there, right? Represent natural extension of our business, sustain superior customer experience. So, folks, you would expect that. New CEO coming in, it's the stuff you would do. Your company's not profitable. What do? I'm going to lower my costs, figure out the high margins, try and emphasize those, and see any other categories that are kind of natural extensive of our business. Let's incorporate them. So that's what he communicates to the market. Well, let's look at what he communicated to his employees. This was an email that was sent out. It's on the web, so I hope that it's okay. I mean, it's available. I'll get straight to the point. Notice the subject line, survival. It's not sustainable for GameStop to operate money-losing business. The mission is to operate hyper-efficiently and profitably. Our expense structure must allow us to endure any adverse scenario. Whether it's a difficult economy, revenue deceleration from shrinking software, we must be profitable. Our job is to make sure GameStop adheres for decades to come. Extremely frugality is required. Every expense, by the way, as I read through this, put in the chat box, which drivers is he talking about? Every expense of the company must be scrutinized under microscope and all waste eliminated. The company has no use for delegators and money wasters. I expect everyone to treat company like their own and lead by example. Prospering in retail means survival. If we survive, we stay in the game. Survival is avoiding the deadly sins that often lead retailers to self-destruct. This is usually a result of buying bad inventory, using leverage, and running expenses too high. By avoiding these self-inflicted mistakes and focusing on the basics, GameStop can be here for a long time. I expect everybody to roll up their sleeves and work hard. I'm not getting paid, so I'm either going down with the ship or turning the company around. I much prefer the latter. It won't be easy. Best of luck to all of us. Cost cutting was profitability. You got to have cash. So a lot about profitability, sustainability of the business, improving the free cash flow. Alan, absolutely got to get there. Well, so here's when the announcement came out. You'll see a pretty quick dip right here, right? The announcement, and then here's where we're at. A little bit of dip. We've got some improvement in December. That's holiday. You would expect a little bit of that. Remember, this got as high as 300 plus per share in 2020. Now, that was inflated by the market. I got to be honest. It wasn't normal economics influencing that growth. It was a bunch of retail investors getting involved and really pushed the price up. Federal government got involved. A number of things happened. Well, so that's kind of where they were in the transition. Well, here's the latest thing that just came out December of this last year. Now, this is where I start to get a little bit nervous about where we're at here. GameStop lets CEO Ryan Cohen invest cash in other stocks. I won't read the rest of it. If you want a copy of this, send me an email. I'll get you a copy of this. You can do a search on this. Think about what he's doing here. When we teach our class, one of the questions we ask when we talk about the cash driver is, what do investors want you to do with their extra cash? And we talk about stuff like put it in a savings account and get better interest, to generate a lot, stockpile as much as you can to earn more interest. We talk about giving big CEO bonuses. One of the things is to take your cash invested in the stock market. Now, the answer is either invest it in your business or get money back to shareholders. That's what they want them to do. Every once in a while, somebody will say, take our cash and invest it in the market. But let me ask you the question. When a company takes their cash and literally invests in other companies, what does that say to their investors? Taking your cash. Now, I'm not talking about low-risk bonds that they'll use to help fund some of their growth in their cash. I'm talking literally taking your cash and put it in the stock market. Taking some of my cash, invested in Apple, invested in Tesla or whatever. Yeah, they don't believe in their own business, getting ready to get out. Yeah, in fact, he's kind of looking at this as more like a fund where I've got multiple stocks. Well, this has just caused some significant challenges for the company. So this comes from a previous analyst. And this is a letter to Ryan Cohen. It says, "Dear Ryan, in this former analyst's humble opinion, you're failing mildly in GameStop, and it's costing average investor major money. Do better, way better. This is painful to watch." Now, I don't know that I'd go that far. He's in a tough situation. I would not want to be in that situation, to try and resurrect a company that's in a retail space that's getting harder and harder to make money off of. It's a challenge. So I could see, well, hey, if I've got cash, well, maybe I can get if I can get a return here, maybe I can get a return over here, get some cash flow in that allows me to fund operations and make the changes we need. But if you can't make the changes, you just are not going to survive. So folks, that's where we're at today. This letter came out in January of this year, kind of saying, hey, what's going on here? Now, again, this is not me being critical of Mr. Cohen. Mr. Cohen's got a tough gig. And if he can get his team together and they can see some ways to adapt what they're doing, maybe they can. For those of us with a little bit more gray in our hair, you'll remember IBM. They had to make a major shift from where they were to services, and they were able to survive. Now, I don't know how GameStop, I'm not an expert in that industry, but he's in a tough gig, and they've been at a tough place for a long time. So that's where we're at. Well, let's see what's going on with the numbers. That's the tool I want to introduce. It's called the Navigating the Financials tool. Now, we have spent a lot more time looking at the history of this, but if you want more time, boy, that movie might be a good option. Just do some quick research. It's a very interesting company for sure. Well, now we're looking at through Q3 of 2022. Let's see what's happened. About 3 months of Mr. Cohen being in his role. The thing I love about this tool is it brings the 5 drivers that we teach in the class, plus the key metrics and the financials all into one place. You don't have to be an expert to be comfortable how to use this. Basically, all you're going to do is you're going to go look at the key metrics. Now, what I have here is listed the 10 most common metrics most company looks at. So don't worry if you're not familiar with the key metrics. These are the very common ones. That being said, if you happen to know, for example, your company's key profit measure, I would do that calculation rather than net income margin. For example, if you use operating income or EBIT, I'd use that as a calculation. EBITDA, gross profit, whatever your key profit measure, I'd run that. But imagine if you did this for the next 2 or 3 quarters, how you can see if you're getting better or not. So here's how the tool works. What you do is you look at what you're looking for, and it's going to tell you what key measures, what line items do I need to look at in the financial statements to actually assess their financial performance? So the first metric is called cash and cash equivalent. For those who have been in our class, you'll be familiar with this is kind of like a savings account for a company. It's where they hold on to cash for unexpected expenses, for future investments, etc. Now, cash and cash equivalent, the line item you're going to look at is called cash and cash equivalent. Now, the tool, the nice thing about the tool is you don't have to go through a full class. It tells you where to go to find the numbers. So to find their cash and cash equivalent, using my tool, just put in the chat box. I want to make sure you're comfortable with this. As you look at this, where did they, what statement do I go to find their cash and cash equivalent? Excellent. Kayla, thank you. Octavia, thank you. Go to that balance sheet. So you don't have them, but I've got them. I'm going to pull them up right here. So here we go. Here's their cash. Okay. Cash and cash equivalent right here. Boy, my cursor's jumping all over the place. Right here, I've got my cash and cash equivalent. Everybody see it? So $909 million is their cash and cash equivalent. Now, they've got these marketable securities. That's taken a bit of their cash. And then basically, if I have enough cash I don't need in the next 90 days, or excuse me, in the next year period of time, I can invest that, get a little better return. Now, typically, they don't just go to the stock market with that. There's low-risk bonds. There's other short-term investments you can do. But really, if you talk to their executive team, they're going to add those two together. So it's about 1.2 total cash position. But to answer our question, how much cash do they have on hand? $909 million. Pretty significant dollar amount. Now, look at that, though. We're seeing it drop. Okay, you're starting to see some of those dollars dropping a little bit. Okay, so that's where we're at there. Cash from operations. The line we're going to look at is actually called net cash provided by operating activity. So what statement do I need to go to? Put in my chat box. Make sure you're comfortable using this. Okay, I go to the cash flow statement. Here it is. Cash flow statement. Now, the line I'm looking for is called net cash provided by, net cash flows used or provided by operating activities. How much cash flow did they generate from the core business? It's right here, this line right here. Put in my chat box. How much cash? How much cash did they generate for the first 9 months of 2023? Yeah, it's a negative. What's that negative mean? They're not cash flow positive. So they're not generating positive cash. Now, this is a big deal. If basically, think of cash as a big bucket. Now, every year you would hope to have positive cash flow. Every quarter, I want to have positive cash flow. If I don't have positive cash flow, where do I go to get cash? Well, I have to go back to that savings account, right? I go back here and I start to burn through that cash because I'm trying to stay alive, if that makes sense. Well, negative cash flow. Oh, excuse me. Actually, for the quarter, they did have that cash flow, and I was going to put that in there. But for the 9 months, they're negative. But actually, Q3, the one quarter they were there, they actually had positive cash flow. So Mr. Cohen actually was able to generate 19 million of positive cash flow. The problem is, before that, they were so far down, they couldn't catch up. You can see it right here. You can see that they've really struggled to have positive cash flow the last 2 years in particular. So in the quarter, they generated 19 million. That's actually a pretty positive number for them. Total revenue, what statement am I going to go to get that? Put in the chat box. There you go. That's the last one I'm going to have you do. So here we go. We go in there. We got to get that total revenue, and it's just a quarter number. They call it net sales. Right there's the number. So I pull that over. I then have to get my net income. Again, go back to the same statement. For every $100, their loss was $3.1 million loss is what they had. They slashed in Q3. So if I want to do their margin, I take the 0.3 or 3.1 is what it is, divided by the how much revenue I have, gives me this loss. For every $100 in Q3, they generated a loss of 30 cents. Now, of course, that's not what you like, but that's how you do the calculation. So we don't have time to do the whole thing. So here you go. I'm going to fill it out for you. I'll give you the rest right here. So here's the rest of the numbers. Now, one thing you can do is you can look at how GameStop was doing just in the quarter by itself versus the prior year quarter. So this is when Mr. Furlong was working. Here's where Mr. Cohen's working. Well, if you look at their cash flow generated, Mr. Furlong generated 177 million last year versus Mr. Cohen. You know what? I think that might be wrong. That might be a negative. I think that's a negative. So I think Mr. Cohen actually had better performance, if I remember. Thank you, Carlos. It was negative. It looks like we got a typo there. So yes, they did improve in that quarter. Even though it's a lot net margin loss, well, this one, for every $100 loss, they generate $8 for every $100 they brought in revenue. In Q2 of 2022, they generated an $8 loss. So he has been able to improve that a little bit. He's also strengthened their financial, what they call equity position, to withstand the ups and downs. That means they can last longer. They're in a stronger financial position. But everything else is pretty tough. Well, not only can you do it on a quarterly look, you can do it for a year to date. So this is 2023 for the first 9 months, and then 2022 for the first 9 months. A little bit less of a loss on the cash flow. So this is a negative 230 million. So for every, they generated a loss of 233, a negative $230 million reduction of cash flow, and versus 193. Margins are better for the first 9 months of 2023 versus 2022, but still the numbers aren't that great. So how would you assess it? Well, it looks like they are a little better, but they still need to get profitable. I haven't done that yet. Hope to see that maybe in Q4 and start a pattern in Q1 to start to see improvement with Mr. Cohen at the helm. But in the end, still numbers are pretty tight. Well, you can also do it by looking at other retail stores. I put Best Buy. Obviously, Best Buy does a lot more than just games. But here's the type of numbers you're seeing there. $290 million cash generation. That's a positive number for them. Obviously, much bigger. You'd expect that from a Best Buy. But profitability, we actually have profitable numbers. Or you can look at it, any company. Those that were with us last year, in December, we did Warner Brothers. So here's their number. So this tool can be used very dynamically. If you want to look at just one company, quarter over quarter, you can look at it that way. You look year over year. You can take a look at other companies in their industry. You can also look at any company just to see how they're performing. Well, folks, that's the analyze phase. The analyze phase is the meat of the program, to go through and get that assessment. Now, what do I know now? I know that GameStop has been a great company for many, many years, but they've had some tough times starting in probably before the COVID, but definitely during COVID had huge downturn. Their stock price skyrocketed because of some retail investors that really changed the way they thought about the business, and they saw some benefits from that. But they're still in a market that's tough to play, to the point where their CEO is getting fired, a new CEO has been put in, cost cutting, reduction of force, trying to survive, do everything I can to see if I can live to stay another day. Not the best message, but still, they're in a strong financial position. They can they saw improvement in Q3. Maybe they can start to see something different, but there's a bit of looking at it in a totally different way of thinking about it. Just trying to do the same thing you've always done and make some tweaks isn't necessarily going to make the changes there that they're needing. But that's what I see so far. So what do I do with it? I love the apply phase. That's probably the most important part of what we do. This slide needs to be updated. I must have an old slide deck here. We're actually 34 of the Fortune 50. One of the biggest things looking at a business or financial course is to actually do something with it. And that's a big part of our program. When we start our programs, we talk to people, say, look, you're going to have a great experience, but then you only capture about 15% unless you do something with it. When you apply this, these are the results people get from applying their business acumen. This is from one of our clients, unbeknownst to us, assessing how well did their program go or the initiative that they did. They found a 300% return on the investment from helping their employees understand how their company runs and then helping them to make better business decisions. The outcomes of applying what you learn in a course like this is you'll improve the performance of your business as well as your function. You'll increase collaborations. All of a sudden, you're not just looking from your lens, you're seeing the bigger picture of the company. 77% improved upward communication of those that take this course and apply it. 77% improved employee engagement, increased business focus, and improved teamwork, all because they took what their executives are communicating and did something with it. Well, folks, that's what the last part of the tool is all about. You got to do something with it. So in the apply phase, you got to do something. To know and not to do is not to know. You got to do something with it. So here's what I've done. Well, the last stage is 3 quick activities. The first thing is, what new insights did you gain? This was absolutely entertaining, interesting. I just came back from Dubai. I actually watched the dumb money on the plane just to learn more about it. It was a very unique environment that happened in 2021, how a group on social media was able to change a stock price significantly and try and resurrect the company. So very unique the last few years. Active investors impacting their company. So the active investors are taking over. That's what Mr. Cohen is. That's what his team is. In fact, a lot of his team is from Chewy on the board, trying to resurrect this company. They're not adapting to industry changes. It's hard to adapt in a retail environment. Coming out of COVID, if you can't adapt, if you weren't adapting before, it's going to be hard to make those changes. And the selective products they have, it's hard. It's easier for like a Walmart who can continue to do online options and shop for us, and we can still get benefit from them. But you got to make those adaptations early, and you got to see, is the market really going to maintain itself? And then the pandemic online shopping impact on the retail was huge for them. So what would I do with this? Well, I want to look at what's going on in the whole industry. I know that you look at like a Microsoft who provides games, the various 2K networks, all the different gaming. How are they? They're doing a lot online. You can download it online. You don't even have to have the CD. So how would that be applied to something like a GameStop? So learning more about their peers in the industry would be interesting to me. As a consultant, I want to share this information with my colleagues as other consultants, clients, and new customers to see what happens that actually retail investors can make a difference. So how do we help people to see that they can make a difference in the company? And then finally, if GameStop was around and they had any interest, I'd love to try and help them. My guess is Mr. Cohen probably doesn't want to invest those dollars. It's tough right now to have a lot of money to invest in a downturn of a company for sure. But love to talk to any of you if you're a GameStop employees and help you learn how to make better decisions in your industry. The last part of the tool then is to, once you've done that, you've done the assessment. I know what's going on in the business. I know kind of what the financial performance is. I've kind of decided what I'm going to do with it. The last thing is to have a conversation. This is where you really move the needle. If it's my own company, if I assess this company, I would go have a conversation with my manager. Share, here's what I learned, and here's what I think I and my team can do to drive to those results. If it's a customer or partner, meet with your sales team or account team and talk about how we could be better partners or better work with our customers, how a partnership with your company can drive your customers' results. If you're analyzing a competitor or benchmark company, use that information. Maybe meet with your marketing team and talk about how you can differentiate what your company provides. Folks, as you do this once a quarter, take an hour a quarter, it absolutely changes the way you build your credibility, your business, and your company. That's 3 simple steps. You prepare, analyze, and apply. In the chat box, my colleague had put the link of where you can find this. My question to you is, as you look at this, once you've done this one quarter, your notes from the tool will be the part of your prepare phase. What do you review? I review what I did last quarter. Again, once you've done it 2 or 3 times, you'll know what your executive team is doing. You'll familiarize yourself with what they're talking about. So as we give that tool out, here's what I want to ask you as our last question in the chat box is this. So with this tool, who are you going to go and analyze? Make a commitment today. One group, one company. Is it the company you work for? If you're publicly traded, I'd absolutely recommend that. If you're not, no worries. If you're not, but you sell into a publicly traded, that would be my next best go. By the way, if you are publicly traded and you in a sales role, for sure, I would do number 1 and number 2 to my biggest customers. Is it a company you want to compete against, partner with, invest with, interested in? Or next month, we're going to look at Airbnb, a very unique model as well. We'll look at this social app markets where we're literally signing up to somebody and saying, I'm going to go stay in your house. Think about that 10, 15 years ago. A lot has changed. So who are you going to assess? Put in the chat box. We'll wrap up with this right here, folks. It's been my pleasure to spend some time. I'm happy to stay on longer. The workbook is in the chat box. So you download that, make sure you get access to it. You can also register for Airbnb if you want to be part of that one. That's going to be February 21st, a little bit earlier than the last week of the month, but we're excited to do Airbnb. Here's where you get the tool. Download that link. You got the tool and come prepared to look at Airbnb. Let's see how they've done. In addition to that, if you are interested, if I've inspired you enough to say, you know what, I want to learn more about my business. Couple ways you can do it. Number 1, in this link, there's an invite for $100 off our self-paced online. If you're an individual contributor, just want it for yourself, it makes it about $200 for the course. It's 13 modules covering the 5 drivers and the 3 financial statements. It's a great interactive session. We'll give you $100 off that. If you have a large enough group, you want to do this with your team. We do these earnings calls not just on any company. We'll actually do it on your company. We'd love to help you look through that. If you're in a sales organization, please contact us. We'll show you how to use this to help your employees really become that trusted partner with your organization. Well, folks, it's been my pleasure to spend some time with you. We hit the top of the hour here. Thank you so much for joining us. Look forward to seeing you. Please invite your colleagues, your friends, peers, direct reports. Let's continue to build our business acumen, and let's really build our credibility, build our career, and build our companies. Thank you much. Have a great day. Those of you who are interested in the story of what happened in 2021, a few of you look like you jumped on the bandwagon. Excellent. You probably know more about than I. Look up Keith Gill. Warren Kitty is his name. Wall Street Bets was the website that all that stuff was happening on. Basically, he started to talk about it, started to say, hey, it's got some real legs to it. And it was basically became social media coming together, saying, let's go after this. And so they went after it. And basically, as people start buying, what happens to that stock price? It starts jumping. And in a very short period of time, it got over $300 a share. What was interesting is some of the hedge funds actually did a short on it, which means you actually borrow shares. You then immediately sell them and then buy them back when it's dropping and then give the shares back. It's a quick transaction. But what happens is if you borrow those shares and you sell them and then they drop, and the market goes up, you actually have to buy them at a higher rate. And actually, one of the companies, it was Melvin. What was the name of it? It's an interesting one. The Melvin Capital, the hedge fund. Look up Gabe Plotkin. They ended up going struggling, had to get bailed out to survive. There you go. Roaring Kitty. There you go, Rebecca. Wall Street Bets. Folks, it was a fun one to do. Sorry, it's not our traditional one. Hopefully you thought it was helpful. Hey, folks, have a great day. We'll look to see you in about 3 weeks. Thanks.